Good day, everyone, and welcome to today's market fundamental and technical breakdown. We're going to share the screen in about 3 minutes. So make out time and invite your friends, invite your friends. Tell them that we are live. Send the link in our group chat on your social media handles. Send it on your status. Share it with your friends and your family that are interested to know more about trading so that they can join us and learn with us as we dive in right now. So I'll be starting off. I'm starting off very soon by sharing my screen. So don't miss out on this. Share this link with your friends and your family who are interested right now, and invite them to come over and join us. Okay, invite them to come over and join us. Okay. So I'll share my screen shortly. So as we wait, let me introduce myself. My name is Anthony Phillips Njoku, and I'm the founder of 10x Digital Lane, where everyone who has a knowledge gap in digital trading can get the right knowledge, get the right guidance, get the right mentorship, and also the right tools to be able to achieve success trading the financial markets. Okay, and I have experience in trading for about 7 years now. I've been trading the charts, making dollars from the financial market. Currently a mentor of about 3,450 people nationwide. I've taught students in USA, I've taught students in Angola, I've taught students in Venezuela, I've taught students in South Africa, I've taught students all over the world, impacting life. Okay, so I want you to know that your change to financial freedom starts with the education you get. That's why we are always here to give you guys the best education. We're always here to give you guys the best guidance, and we're always here to give you guys the best information to be able to achieve success. So I want you to believe in what you are being taught and put it into action. In any endeavor you find yourself, there's always a principle I have in mind, and the principle is get the right education to give you responsibility and control. Okay, so I'll be sharing my screen shortly so that we can dive into the the training proper. Okay, fantastic. Let me share my screen. Please don't forget to smash the like button. Don't forget to comment your questions on the comment section. I'll be going through the comment section. I'll be interacting with you via the comment section. I want this to be an interactive session. Okay. If you have any questions, anything that is confusing you at all, drop the information on the comment section. Okay, and I'll definitely go through the comment section to answer those questions one after the other. Okay, this is an interactive section. I'll say that again and say that all over again. Okay, good. So if you can see my screen right now, type Forex on the comment section. If you can see my screen right now, type Forex on the comment section. If you can see my screen right now, type Forex on the comment section. If you can see my screen right now, type Forex on the comment section. If you can see my screen right now, type Forex on the comment section. Okay, Aka Deloha typed Forex on the comment section. That's fantastic. So that means that Aka can see my screen, Aka can hear my voice. Wonderful. Z Wonder can also see my screen. Fantastic. So let's dive into this. My friends, if you're new to Forex trading, I want you to know that some of the terminologies I'll be expressing to you will be new to you. Okay, some of the terminologies I'll be sharing with you will be new to you. But just stay to the end. You will be able to understand it as we progress. What you're currently looking at right now is a chart. Okay, a chart. And a chart shows the graphical representation of two things: price, okay, and time. Time is below here, price is over here. time is below, price is by the right. Okay, so this is a graphical representation for you guys that don't like intro tech back in school, or you guys that don't like mathematics when they say y-axis and x-axis. This is something similar to that, but don't worry, with time you'll be able to understand it and flow with it. So what we're currently looking at is DXY, the strength of the dollar. DXY over here, you see it, US dollar index. On the top left, you see where my cursor is, US dollar index. And you might be wondering, what is this US dollar index? US dollar index shows us the strength of dollar. US dollar index shows us the strength of dollar. So this chart can literally tell me, okay, this week dollar is going to be strong against the naira. Next week dollar is going to be weak against the naira. This is what the DXY is all about. Okay, this is what the DXY is all about. So you need to take this very serious, because dollar is the world power. So before we start analyzing any other instrument, any other asset, you need to check out what is the dollar doing, what is the strength of the dollar. So currently, let me narrate the story, because the chart has a story. The dollar started climbing up in strength as at June 24th, created a high price. After creating a high price, it created a low price. People bought more dollar. Then it created another high price, a low price. People bought more dollar. It created a high price, a low price. People bought more dollar. Then it created a high price. What happened here? When it created this high price, people were saying, dollar is getting too expensive. Those who bought from here will start saying, okay, I want to sell a bit. They sold. Some people might buy, expecting it to go higher, but it didn't. It dropped lower. Those who bought here said, it dropped lower. I want to sell. It went up. They sold again, and dollar dropped. So dollar is gradually losing strength. And what I anticipate for dollar right now is what? To have what? A push up in price and drop further down. So I'm expecting dollar to lose more strength within this week. Welcome, Chijioke Augustine. Chijioke Augustine, I can see your reply. Forex, welcome. So dollar, I'm expecting dollar to lose more strength. Then I'm going to narrate to you how important this DXY chart is along every other pair. Why do I expect dollar to lose more strength? I expect dollar to lose more strength because I have studied this chart. I've been studying the chart for the past 7 years right now. I've been making my money from the chart for the past 7 years right now. I've been making dollars from the chart for the past 7 years right now. And based on what I've understood from the chart is that market moves with demand and supply. If there is no demand, you can't supply. If there is demand, you can supply. So the demand for dollar is diminishing, is reducing. So what I expect right now is that dollar would what? Move to the upside and increase in price. When it increases in price, because it is currently low right now, so the demand for dollar is high because the price of dollar is low. Okay, since the price of dollar is low, people will buy. When red zone I marked out here, this red zone I marked out here is a supply zone. Once the market or price comes into the supply zone, there's going to be massive sales of the dollar. And when they sell it, it comes into this demand zone. I expect it to come into this demand zone. Okay? So that is what I see for DXY. Then the next on the list is euro against the dollar. Euro against the dollar. So for euro against the dollar is 80% correlated. It is 80% correlated. Let me explain to you what this means. Okay, DXY. Okay, Euro USD. Okay, let me explain further. I know that this is going to be very valuable to you guys. GBP USD, XAU USD. These are the most popular traded pairs. So let me line it up. Okay, good. Why I had to explain DXY's current status. Why I had to explain DXY's current status is because of this. I told you guys that DXY would go into what? A supply zone before going into a demand zone. Okay? I told you guys that DXY will go into a supply zone before going into a demand zone. Over here, this is the supply zone is coming out from. When I say that Euro USD is 80% correlated with the dollar, this is what I mean. Okay? Resistance. And this is support. No, not resistance, support. Okay, so this is what I mean. If we're expecting DXY to go up, this is where price was on DXY. If we're expecting DXY to go up first before it comes back down, we expect the inverse on Euro USD. Okay, we're going to expect Euro USD to what? Go down first before it goes up, because it is correlated. It is correlated. The inverse is what we expect for Euro USD. The same with GBP USD. The same with GBP USD. The same with XAU USD. Okay, DXY, we expect it to go up before it comes down. Go up before it comes down. Euro USD, we expect to go down before it comes up. Okay, so it is what? 80% correlated. Whatever DXY is doing, the inverse will be happening on Euro USD. The inverse will be happening on GBP USD. And the inverse will be happening on XAUSD, but 50%. 50% Euro XAUSD is 50% correlated, 30 to 50% correlated. So most times DXY doesn't control it. But if you analyze DXY and you don't understand what DXY is doing, check out Euro USD. If you understand what Euro USD is doing, then you are close to it. Okay, so that's what I see. That's what I see about this market. I've been analyzing it for a very long time, and that's what I have got to understand, that whenever DXY is confusing to me, I just check out Euro USD. If I understand Euro USD, boom, I got the game clear. So for Euro USD, I already explained, we expect Euro to come down into this demand zone before we expect one more push to the upside. Okay, giving DXY strength for the start of the week before a push to the upside to make it weak. Okay, so that's what I see for Euro USD. Then the next is AUD USD. AUD USD. For AUD USD, I expect the same bias as well, because it is also appointed the same way Euro USD is appointed. For AUD USD, from this supply zone, I marked it out. I went backwards. I already analyzed this market before this session. I went backwards and I found a supply zone. Okay, guys, I found a supply zone that the market needs to come and fill, and this is the supply zone. This is the supply zone where we're anticipating what? Sell-offs, AUD USD sell-offs. Okay. So one thing I love about AUD USD is that it respects zones. Every pair has its characteristics. I have already told you, Euro USD is 80% correlated with DXY. One thing I love about AUD USD, it respects zones. If it's going to respect a zone, it will respect it. If it's going to disrespect a zone, it will just break it. It's not there to come and make things too complicated for you. That's one thing I love about AUD/USD. That's why I like to monitor AUD/USD and Euro/USD first. So for AUD/USD, I expect what a drop to the downside from this supply zone before another push to the upside. But it's going to sell from this supply zone. So we'll be looking for our sells first at the start of the week. But before the week ends, then we can now start looking for our buy setups. But don't forget, no matter what we see here, the market is still on an uptrend. The market is still on a massive uptrend, okay? And just these sells can give you $1,000. One of these trades, a sell, just this sell I'm calling out for you now, from here to this point, can give you $1,000 if you apply proper risk management, okay? To get $1,000 from this trade now, you reach $200, and then you apply for 1:5 risk to reward ratio, okay? Aiming for about let me see how many pips this could be. Is about 70 pips. Let's see, can we get 75? Yeah, 75 pips. If you risk 15 pips and go for 75 pips, then you can get $1,000, risking $200 per trade. Okay, so guys, take this setup very, very serious. The market bought massively from last week. It bought massively, and if you can see, price is far apart from the trend line. So I will not be looking for my buy setups at this point. I'll be looking for my sell setups at this point. If you have any questions, please drop it on the comment section. If you have any questions, drop it on the comment section. I can as well do some Fibonacci retracements. People like to say sell at discount and take profit at premium. ICT traders, if you're here, sell at discount, we're at a discounted price, and take your profit at premium. Where is the premium? 50% to 60% Fibonacci retracement point. That's the premium price. And it is close to where my target is to take the next buy. Okay? Sell at discount. Market is currently at a discount. Okay? So once the market gets into this point, I can see there's something like once the market gets into this point, then I'll now start looking for my buy setups from this point. I'll start looking for my buy setups from this point. Okay? Fantastic, guys. Any questions? If you have any questions, drop it on the comment section. If you have any questions, drop it on the comment section. So the next is GBP USD. The next is GBP USD. GBP USD. GBP USD is quite complex, but I can still read it. So for GBP USD, we can see this. The market created a high, a low, a high, a low, a high, creating highs. And from what I can see on GBP/USD, there is a point of reversal. Every market has a point of reversal. Okay, let me address Wanda's question. Z Wanda, he says or she says DXY is the dollar. And what other currency? DXY is only the dollar, my friend. DXY is only the dollar. It is an index. Every pair has its own index. Let me show you. Every pair has its own index. I hope that this chart is saved there. Index. Okay, yeah, it's saved there. Every chart or every pair has its own index. Euro. This is Euro's index, EXY. Let me now go deeper. This is Euro's index, EXY. It analyzes the strength of Euro only. Euro only. This is Australian dollar currency index. You can see it over there. If you zoom in, you see where they wrote it boldly. Australian dollar currency index. If you go there, it will analyze the strength of Australian dollar only. It will analyze the strength of Australian dollar only. Only Australian dollar. If you come over here, the next one where they wrote BXY, British Pounds Currency Index. It analyzes the strength of the British pounds only. So all these analysts, data analysts that provide the strength of every currency every day, they combine EXY, AXY, BXY, SXY, JXY, ZXY with DXY to give you the strength of currencies. And I post this strength of currencies every single day in our group chat. Okay? I post it every single day in our group chat. So you need to try and understand that to be able to trade this market and be able to make good profit in this market, one thing I will always tell you guys and I always remind you guys is that in a day, there is always a currency that is stronger than every other currency. In a day, there is always a currency stronger than every other currency. Today, Sunday, could be DXY, which is dollar is strong. Monday could be Australian dollar. So if you check Australian dollar against dollar, it will be going up in value. Like if you see closely here, let me show you guys. If you see closely here, over here, this is on Tuesday. On Tuesday, GBP was strong against dollar. It was just moving up, up, up. Came back down a bit, started moving up, 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 up. Got to this point, came back down a bit, started moving up, up, up. Came back down again, started moving up. So GBP was massive from Tuesday to Friday. So if you just bought GBP on Tuesday and held it to Friday, you'll be in good profits to the end of the week. Okay, so that shows a sign of weakness on the dollar. That's why we analyze the dollar first, so that the dollar is weak. Then we go to other pairs and pair it with the dollar. Since we know that the dollar is weak, we can now say, okay, we expect dollar to gain strength so time, and then lose strength so time again. Okay, so for GBP against the dollar, it's a bit complex because we have a very massive supply zone, which is where we expect sellers to start coming in. So I'll be monitoring this pair closely. Once we see some reversal candles formation, like a doji, a bearish doji candle, or probably a pin bar, then we're gonna start looking for our sell setups for GBP USD to the downside. Okay, so we might be expecting the sell to, it might not get to this actual zone, it might not get here, it might go halfway and then continue the push to the upside. Okay, so that's what I see currently for GBP USD. The next one on our list is XAU USD. XAU USD, which is gold. One of your favorite pairs. Gold, XAU USD. Okay. Okay, let's go, guys. So fantastic. So for XAU USD, I see that there is a supply zone here the market is heading towards, which is where we're expecting sellers, massive sellers, to come in. Because if you can see, the market bought massively. After buying, it came over here, consolidated for a while. I expect sellers to come in over here. This is why I expect sellers to come in. Okay, so for gold, I still anticipate what? A push to the downside towards this reoptimization zone, and then I still expect dollar to gain strength at the start of this week. This is the reoptimization zone where I expect dollar. I expect the market to come into the reoptimization zone. Okay, which is the previous resistance turned support for some guys, the basic guys. So when it comes into this reoptimization zone, then you can now start pushing to the upside. To be honest with you guys, I've been finding gold very interesting to trade nowadays, because it gives me fast profits. Like I'm really catching the fun on gold though. So this is what I see for gold. Okay, so this is what I see for gold. This uptrend will be maintained. Okay, this uptrend, I don't expect the market coming back into this consolidation, because I knew what it took before the market broke this consolidation. It took days, 2 days. It took 2 days before the market could break this consolidation over here. It took 2 good days. So if there's going to be any retest, I don't expect it to come into this zone. Where I expect it to come into is this what reoptimization zone. Minimum this reoptimization zone. When we now start seeing reaction of price, we now start buying. Me for gold, I will not be interested to sell gold at this current point. No, I won't be looking for sell opportunities. If I see a corrective structure into this reoptimization zone, I'll be interested for the buy. So you guys should join our Telegram. The link is going to be on the description. Click that link and join our Telegram. Okay. Once we send signals, you can use the signals to place your trade on gold. We're monitoring these pairs. I'm analyzing a lot of pairs right now, but most times within the week, we can just monitor 1 or 2 pairs. Okay, to give you guys the best signals and best updates. Okay, so you guys should take it very, very serious. Once we have a corrective structure towards this zone, then we start buying the gold. Okay, I'm interested for buys for gold. I'm not interested for sales. I repeat, I'm interested for buys for gold. I'm not interested for sales. Okay, I see a question from Daniel. Thank you, Daniel, for dropping it on time. Daniel says, what is the difference between analyzing the market on daily time frame and 4 hours time frame? Is there any difference in their zones? Okay, that's a very important question. Analyze Bitcoin all over again. Let me delete the Bitcoin chart. Okay, so the difference between analyzing the market on the 4 hours time frame and the daily time frame is the zones. Zones. See it this way. Let me explain it to you in the way that my my great mentor in Dubai taught me. Uh, H4 or is it 4H? 4H time frame and 1 day time frame. Okay. So my mentor taught me that for the H4 time frame, if this is a line, that is a zone. When it comes to daily time frame, this same line that is a zone will not just be a line. It will be a cable. It will be thicker. It will be thicker compared to the H4. So markets can easily break through a H4 time frame zone. Okay, but it cannot easily break through a daily time frame zone. That's just the difference. That's just the difference. Market can easily break through a H4 time frame zone, but it cannot easily break through a daily time frame zone. So markets can highly respect the daily time frame zone, and can disrespect the 4 hours time frame zone, but they work hand in hand. When I analyze the market, I start first with the daily time frame zone, then I try as much as possible to merge the daily time frame zone with the 4 hours time frame zones. So let's do that now. Let me go to the daily time frame for Bitcoin. I'm going to analyze Bitcoin that way because you asked. So for Bitcoin, what do I you see, I see, we all see. So over here on Bitcoin, I see this daily time frame zone. I'm on the daily chart right now. I'm on D1 time frame zone. So this is the demand zone for Bitcoin. Okay, this is demand zone for Bitcoin. Okay, this is demand zone for Bitcoin, and this is the uh, this is supply zone for Bitcoin. on daily time frame. Okay, this is just what I need to do. I don't need to do anything extra like making it too complex. And if you can see this particular demand zone, was it respected? Yeah, it was respected by that candle, daily candle. The body did not close below it. Okay, the body did not close below it. So this is quite a good structure. So based on what I can see here now, let's go down to the H4 time frame. H4 time frame. So I try as much as possible to merge what I have seen on the daily time frame with the H4 time frame. And what do I see? This is a 4 hours supply zone over here that has not fulfilled efficiency yet, close to a daily time frame supply zone. And I mark it out. You have to merge the two together, because if the market gets to a supply zone that entangles both with the H4 and daily time frame, then it's a very strong supply zone. Okay. Then based on what I can see currently on the Bitcoin chart, I see that market still has potential of going to the downside towards the 51,000 per Bitcoin mark. 51,000 per Bitcoin because of that daily demand zone there. 51,000 per Bitcoin mark. I still see it. But due to dollar cost averaging strategy, that doesn't mean that you can't start adding positions on Bitcoin trade. Okay? That doesn't mean that you can't start adding positions on Bitcoin trade. So what I anticipate now for BTC is a push to the downside, sorry, to the upside before a push to the downside. Okay, and there's still probability that the market can just start selling from the current point. Okay, and based on what I can see also, I see that liquidity has been taken below here. Let me make this. Liquidity has been taken below here. Okay, and after that liquidity was taken below here, it created this supply zone, which is more like equilibrium price. And from here now, you see market respected that particular zone and it started pushing to the downside. So if the market breaks this zone to the upside, then we can expect it to go into this zone. Okay, once it gets into this zone, then we start selling when it gets to this zone. But if the market doesn't break and continue and breaks this low, if the market breaks this low over here, then we can anticipate more sales. Okay, if the market breaks this low, then we can anticipate more sales for Bitcoin towards the $51,000 per Bitcoin mark. That's where I'll be more interested to start looking for my buys for Bitcoin. Okay, so this is currently what I see for BTC USDT. Okay, this is what I see for BTC USDT. And if there's anything that is too complex for you, just reach out to me. Then we'll make our time to analyze the market briefly for you as well. Okay, so this is what I see currently for BTC USDT. Good. So any questions before we move to the next segment of our presentation? Any questions before we move to the next segment of our presentation? Okay. If you have any questions, drop it in the comment section, guys. If you have any questions, drop it in the comment section. Okay. Daniel says, can I make 4 hours, 1 hour and 15 minutes time frame my major time frame for my analysis? Okay, that's very interesting. So there's what we call top-down analysis. And for top-day trader, and the strategy I teach traders is to be an intraday trader. I tell them to go and spot out zones on the daily time frame. Merge these zones with the H4 time frame. And then find entries on the 15 minutes time frame. That's the way I trade. I don't I don't incorporate 1 hour time frame. But if a structure is not clear to me on the H4 time frame, I find myself incorporating the 1 hour time frame. Why do I say so? Let me show you an example. Thank God you asked this question. Let me go to GBP Good. I told you guys on GBP we have a very massive supply zone. This is where I have the opportunity to go down to 1 hour time frame. Okay, when I go down to 1 hour time frame, I'm going to be able to spot out a solid supply zone I can use as well, which is not as large as the H4 time frame. Okay, because this yellow line you see over here is my daily supply zone. But since this daily supply zone has been broken here by this candle that ended the week on Friday, I'm going to have to move this towards this next supply zone on the daily time frame. And then I incorporated that particular supply zone with my 1 hour time frame. This is only when I use 1 hour to refine the zone, to refine it. There's what they call refining a zone, breaking it down. Okay, so this is currently what I think you are trying to understand, but most times you need to and you have to check out the daily time frame. Don't miss out on that daily time frame. Don't ever miss out on the daily time frame. Check out the daily time frame. Okay, so for GPUSD, this is now looking more complex, which means that I will not be looking for sales on GPUSD anytime soon. I'll not be looking for sales for GPUSD anytime soon. I'll wait for the market to go into here, then give me this sell for the start of the week, from Monday to Wednesday. This is the move I'm expecting for GPUs because we refined the zone on the 1 hour time frame. So once the market gets into this zone, I'll now go down to my lower time frame and start looking for my entries for my trade. Any other question? Thank you. That's a very, very important question. Very important one. But don't ever forget to check out daily time frame, because you are an intraday trader. You place trades and you close trades within a day, maximum within 24 hours. Okay, but that doesn't mean that you cannot move from intraday trading to swing the trade. Okay, some people can find entries here, and intraday trader can find entries here. Okay, and his first take profit will be somewhere here, but his second take profit could be this swing trade, and his last take profit could be this zone. If you know how to incorporate swing trading and intraday trading. But the rules of intraday trading is that you should find your entry and your take profit within a day, maximum within 24 hours. That's why we incorporate day trading candles with 4 hours to get our entry in 15 minutes. You're welcome, Daniel. I see you said thank you so much. You're welcome. You're welcome. Let's make money. Let's make money this week, okay? To be honest with you, let me break down something very transparent with you. We have a lot of participants in this market. In any business you see yourself, we have a lot of participants. Okay? Banks are trading, companies are trading, fund managers are trading. Okay? Retail traders are trading. And every single individual has an approach to this market, has an approach to this business. They have a different approach, they have a different system. But the most important thing, and I always hit the nail on the head over and over and over again, is make money. I repeat, make money. I repeat, make money. I have seen my colleagues, I've seen my friends. They know this strategy, they know this analysis, they know this market approach. They want to convince me to learn what they know. But what I know is making me money. It's better I understand what I know deeper and deeper and deeper and deeper and deeper. Get married to what I know, okay, and understand it more than 1% of everybody in the world. Understand it more than any other person in this world and use it to make money than I am trying to what, take a peek at what the second person is doing to now try and incorporate with what I'm doing. If I do that, I'll lose my edge. So what I'm advising you guys is whatever system you're using that I have taught you, take it, accept it, believe it, implement it. So Daniel says, but please, how can I know where to put my stop loss, and also how can I know the exact pips to risk? Daniel, you're asking questions like you're not my student. Or is this a different Daniel? Daniel, you're asking questions like you're not my student. How can I know where to put my stop loss, and also how can I know the exact pips to risk? Okay. So I told you guys to ask questions to make it interactive. How you can know exactly where to put your stop loss? Like, let me check out a trade I called for you guys last week that hits the profit targets. I think that's Euro USD. I've deleted that, and I called that trade. I think I called it on Wednesday. Yes, I called it on the Wednesday. Okay, Daniel says it's him. Oh, he's just a bit confused. Let's go down to 15 minutes time frame. Okay, this is 15 minutes time frame. Okay, so there was a news that happened on the what is it called? On that Wednesday. It is called jobless claims. It is called jobless claims. So how can I know where to put my stop loss? We are always taught that the market creates swing highs, swing lows. Okay, when creating an uptrend, swing highs, swing lows when creating an uptrend. And based on textbook pattern, we're always advised whenever the market creates a swing low, whenever the market creates a swing low over here or this swing low over here, we place our buys and then put our stop loss below the previous low. Whenever market creates a swing low over here, we place our buys and put our. So for instance, if I'm to place my buys over here, based on textbook pattern, I'll place my stop loss below this previous low. Let's give it breathing space, 10 pips, and go for higher, 20 pips. So over here is the entry point. After this entry point, we put our stop loss below it, which is 10 pips. Then we'll take our take profit 20 pips. Okay. So let me show you guys a graphical representation of what I just shared with you guys right now. So this is the chart, okay, and there is an indicator I just filled in, and if you can look closely, this indicator what shows me swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high. When the market gave us news by 1:30, this is 1:30. This is 1:30 candle. Okay, we got news by 1:15. Sorry, we got news by 1:15, and it shows us that dollar was weak. It shows us that dollar was weak, and if you can see, this market has been ranging. It has been ranging. Okay, undecisive. Should we go up? Should we come down? Should we go up? Should we come down? That's what I mean by ranging. Okay, should we go up? Should we come down? That's what I mean by ranging. So this market has been ranging within this zone. Okay, they never had a decision, but as soon as the news came out, it told us that dollar was weak. That's when I told everybody, oh yeah, buy euro against the dollar. I placed the stop loss 15 pips stop loss. This was where the stop loss of 15 pips. Why did I place it there? Because of this principle that says place your stop loss below the previous low. This is the previous low, abi? Yes. And then I placed my stop loss below it. And then this particular indicator gave me 15. This particular entry, what do I call it? Entry indicator gave me 15 pips. So that's how I knew that it's going to be 15 pips. I chose 15 pips. I like to use round numbers most times. I either use 10 pips, 5 pips, 15 pips, 20 pips. You understand? Then I told you guys to take 1:3, which is 45 pips. And before we could say, before 3:30, or before, by 3 o'clock the target was hit. Let me not say before 3:30. By 3 o'clock the target was hit. Okay, so I just showed you now, Daniel, where to put my stop loss. I have already explained it, and how many pips. It all depends on the space you see, or the space that is in the chart. Something else you need to also understand, Daniel, is that there are different patterns in the market. There are different patterns in the market that requires different stop loss. I just showed you swing high, swing low entry pattern. Okay, there are different patterns in the market. Let's say for instance, there's what they call ascending wedge. Let me just make out my time and bring ascending triangle. There's what they call ascending triangle. There's what they call descending triangle. There's what they call descending triangle. There's what they call ascending wedge. There's what they call ascending wedge. There's what they call descending wedge. I'm just making out my time to explain to you, Daniel, because you're like a brother to me. So this descending wedge. Let me now explain to you that this market you're trading, this forex you're trading, is like a game. If you're able to identify chart patterns, you can be profitable. So the strategy of trading ascending wedge is this. The market is creating what? Swing high, swing low, swing high, swing low, swing high, swing low. Once the market breaks, oh God of this, what happened? Let me draw that again. Swing high, swing low, swing high, swing low, swing high. Once the market breaks this high, okay, and comes back and retest it, you place your buy for what? This next swing high, because there's going to be a massive rally. Okay, so the strategy we're always taught is once there is a breakout, our stop loss is meant to be what? It's meant to be below the candle. This is something I learned from a broker in London, in New York. It's meant to be below the candle that broke this particular high, because this was resistance. It was a very massive selling. So it's meant to be below that candle. Okay, then you take your profits above. You take your profit above. Inverse is the case for this descending triangle. They have swing low, swing high, swing low, swing high, then a break. After this break, we have a retest and then continuation break to the downside. Okay, so what you do at this point is that you use your sell entries from here, and then you place your stop losses over here, and then you take it to the downside. So the stop loss is meant to be below, above the candle that broke this particular wedge. Sorry, triangle, descending triangle. Then the wedge is the reverse. It's the reversal pattern. The wedge is the reversal pattern. This is how the wedge works. The wedge, we have swing high, swing low, swing high, swing low, swing high. Then there's always a break to the downside on the wedge for a reversal. Okay, that's how the wedge works. So the wedge, when it breaks, okay, this is where you get your entry, okay, for wedge pattern, and then your stop loss is going to be below, so above the last high candle. Okay, then we aim for the downside. The same with the this is ascending wedge. Descending wedge is the same thing. Is a reversal pattern. It's a reversal pattern. Then we have this break, and then the continuation push to the upside. So where you get your entries, once there is a break, you find your entries, or at the rate test of that break, you find your entries, and then you place your stop loss below the candle, this low candle, okay, and then you put your, and based on take profit and stop loss, minimum risk to reward you're meant to go for is either 1:2 minimum, or 1:3, 1:4, 1:5. Okay, so that's it. So different patterns come with different areas of you placing your stop loss, and these different areas of you placing your stop loss determines how many pips you are risking. Different patterns comes with different areas of placing your stop loss based on principles. All these patterns has principles to follow it along. If you don't follow the principles, you will fail. Once I figured out that this market or the chart patterns I see, this is a game that you need to understand the patterns you see on a daily basis. There's always going to be a pattern. You need to be able to ask yourself, which pattern am I seeing today? Am I seeing an ascending triangle, or am I seeing a descending triangle? Am I seeing an ascending wedge, or am I seeing a descending wedge? You figure out the pattern. You know, okay, this is the entry criteria. Once the ascending triangle breaks the resistance, I enter. This is where the ascending triangle stop loss is meant to be. Place it there and then take 1:2. If your stop loss is 15 pips, aim for 30 pips if that's what you want. If your stop loss is 10 pips, aim for 20 pips. If you want to be greedy, you go for 30 pips. So that is what I am trying to explain to you to understand. Okay? I hope you got you got value, Daniel. Because I can remember when we used to trade live, I always used to check out these patterns. We used to trade live, and we still trade live this week. Okay, I'll pick out a day, we trade live, and then we are able to follow the market. Know that it's not just you want to put stop loss anywhere. There is an appointed place to put stop loss. So for you guys that want to learn more from our academy, you are watching this, is very interesting to you. You want to learn more from our academy, you can join our academy. Okay, we have this link, the seller store link is going to be on the description. Once you go there, you click on that store link, it will take you to this our website. Okay, and once you go to the website, how you can gain our services, first of all, you need to pick a package. You need to sign up for a package. Either you go for a 1 month package, $49, or 3 months package, $139.65, or 6 months package, $264.06, and 1 year package, which is $470.04. Okay, Daniel says you got value. Fantastic. Don't forget to smash the like button. Don't forget to comment, and don't forget to share this video on all your social media handles. Okay, share it with your friends that want to know more about forex trading, at least to get some in-depth understanding, because I broke down a lot of things. This is not how I used to do my market fundamental and technical breakdown before. No, I used to go straight to the point. But because of the love I have for you guys to grow, because of the leadership ability I have in myself to give you guys the best value, that's why I'm taking my time to break everything down. And I know with what I've shared with you, you can be able to utilize this information and make money. And when you make money, you're going to give honor to whom honor is due. Because my passion is leadership and financial freedom. What really makes me happy is to see the transformation in your lives. When you become less bothered about money and live a life that you love. I have a very, very selfless heart. And that's how I have been programmed. I don't know. But God that created me that way brought its blessing along with it. I'm selfless. But when I become selfless, there are blessings that comes with it. There are supernatural grace that comes with it. And that's who I am, and that's who I've become. Okay? So with that said, there is a means of you gaining access to our program. You can make payment with our bank transfer. You can make payment with our debit card. You can make payment with crypto. Okay? So the debit card and bank transfer, you can use our company account. But you first of all select a package you're going for. Then you pay to the company account, 10x Digital Asset Limited. Not any other person's individual account. So you're not paying to my own account. Once it comes to business, you're paying to the 10x Digital Lane account. Okay. Then once you gain access to it, we move to the next level of you gain access to all this valuable information over here. All this valuable information over here. Okay, you gain access to our one-on-one live sessions. You gain access to our signal sessions. You gain access to our textbook. You gain access to our VIP group. You gain access to our mentorship. You gain access to our education on our website. You gain access to our advanced mentors, in one in London, another one is in New York. They will guide you through the process. And if you have anything confusing to you, you reach out to me and I'll be able to put you through on it. Okay, so that's what you gain access to. And it's very, very important you do understand that. Any questions about our courses? 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 Okay. So don't forget that you also have a chance to get $5,000 account. You also have a chance to get $5,000 account if you go for our 6 months package upwards. Okay, because I studied in a book called Market Wizards. So the wizards of the market, they get the privilege of understanding the market very well with our guidance and our mentorship. Then at the end, we'll be giving you a test. Once you pass that test, we'll give you a certificate. This certificate enables you to now gain access to our $5,000 evaluation account, but you have to go for the 6 months class upwards. 6 months class upwards. Okay. But if you go for the 3 months or the 1 month class, you don't get access to $5,000 evaluation account. If you go for the 1 year class, then you also get $5,000 evaluation account. We have partnered with some companies in Dubai. We have partnered with some companies in Canada as well to offer you these services. We're also partnering with a company in Nigeria over here now to offer you guys retail consumer products that will keep you healthy and strong. The announcement will be coming very soon. Okay, so watch out for it. Watch out for it. So with that said, let's dive into the next segment, which has to do with the fundamental analysis. Fundamental analysis. Because I have understood that this market is driven by not just fundamental analysis, but it's also driven by technical analysis. So the technical analysis is like the body, the bone of the body. Okay, why the fundamental analysis is the blood that flows in this body. I repeat, the technical analysis is like the bone, the structure of the body. Why the fundamental analysis is the blood that flows in this body. Okay, so you need to be mindful of it, and you need to always check it out before you start trading every single day. You cannot just jump into the market and start trading the market without knowing what is happening fundamentally and combining it together with what you're seeing technically. Okay, so with that said, starting off the week on Monday, we have balance of trade for euro. Balance of trade. You have to do it total imports minus total exports. Total imports minus total exports. So if the imports are higher than the export, it is bad for euro. If the exports are higher than the import, it is good for the euro. So the figure we're going to see over here, if it is higher than this figure, the actual figure we get tomorrow morning by 7 o'clock, if it is higher than this, okay, if it is higher than this, then we expect what euro to be strong, and this is going to come at 7 o'clock tomorrow. 7 o'clock tomorrow, so you need to be mindful of it. So if we see something, a figure higher than 20.3 euros, okay, if you see something like 21 euros or something like 20.5 euros, then we're going to see euro to get strength. But if you see something lower, we're going to see euro to be weak. Okay, so then the next year is on Tuesday, exactly by 12 o'clock West African time. We have retail sales monitor year over year for GBP. Retail sales monitor year over year. So for this retail sales monitor, it has to do with total sales, retail sales. Okay, and you know that Great Britain just finished their election, okay, last week. And with this new improvement now, this new system, you'll be able to monitor the retail sales of products in London to know if people are happy about the new leader or they are not happy. Because if so many people are happy, they will spend and they'll celebrate. You understand? It's psychology. So with that said, the retail sales, if you see something higher than 0.2, it is good for Great Britain pound. But if you see something lower than 0.2, it is bad for Great Britain pound. Okay, then we have consumer confidence for Australian dollar, exactly by 1:30 a.m. West African time. Consumer confidence, Westpac consumer confidence, has to do with how the consumers in Australia are feeling and what they think. Do they think the economy is optimistic, or do they think the economy is pessimistic? Okay, so we have a consensus of minus 0.3. Okay, if you see something higher than 0.3, it will be good for Australian dollar. If you see a figure lower than 0.3, it is bad for Australian dollar. Okay, then we also have Westpac consumer confidence again. We have business confidence. That's to do with the business individuals, what they think about the economy. Okay, like recently, I'm currently in Enugu State, West Africa, Nigeria, and be getting some news in the economy that okay, the tax authorities, they are now going to business premises and they're asking for tax that are not even meant to be asked for. Okay, there are some fees people are now paying that they're not meant to be paying. Okay, so all these things now are making business to feel bad. So this indicator is going to show, does the businesses in Australia think that yes, the government are doing well, the tax are fair, or does the business in Australia think that the government are not doing well and the tax are not fair? So if you see a figure higher than -5, it is good for Australian dollar. If you see a figure lower than -5, it is bad for Australian dollar. It is data, it is figures. Okay. Then on Wednesday we have Fed Chair Powell. He's speaking to us by 3 p.m. Okay, he's a very important man, so that news is going to have some massive high impact. Then the next is on Thursday we have GBP month over month. GDP month over month for Great Britain pound. There's a lot of high impact news for Great Britain pound this week. Great Britain pound month over month is if you see a figure higher than 0.2%, it is good for Great Britain pound. When we see a figure lower than 0.2%, it is bad for Great Britain pound, the GDP results. Then we have another goods trade balance. We have goods trade balance. It has to do with imports minus exports again. Then goods trade balance non-EU. We just need the figures here, the consensus figure. Okay, if you see something higher than this consensus figure, it is good for GBP. But if you see something lower than the consensus figure, it is bad for GBP. Okay, then we have on Thursday initial jobless claims. Like last week's jobless claims was bad for dollar. Okay, but this week's jobless claims is coming along with CPI. I love that. This Thursday we are seeing CPI, and if we are seeing inflation increasing in dollar, okay, like this current CPI you're seeing over here, we have is that 314.3. Okay, if you see a figure like 315, dollar will be strong immediately on Thursday. Okay, but if you see a figure lower than 314.3, dollar will be weak instantly. Okay, so don't miss out on this news on Thursday. We are going to trade live on Thursday. Let me just make it official. We're going to trade live on Thursday. We're going to start our live trading session, New York session on Thursday by 12. Don't miss out. Join our Telegram. The link is going to be on the description. Okay, so we'll follow up. Then on Friday, to wrap up the week, we have PPI, Producer Price Index, to know the prices of goods and services. Okay, the Producer Price Index has to do with the prices producers are paying now for raw materials to produce their goods. Okay, if there is a higher price, it is going to make dollar weak. If there is a lower price, it's going to make dollar. Sorry. Let me explain this properly. We have 0.1% over here for producer price index. If we see a figure like 0.2 or 0.15, then this is going to make dollar to be strong. But if we see a figure like 0.5, no, 0. Or minus 0.1 is going to make dollar weak for this producer price index on Friday. And Michigan consumer confidence, that's really just sentiment analysis, okay? So what we're looking at mainly for is on Thursday, the CPI, New York session. Let's not miss out on that, New York session. And then we'll also be listening to Fed Powell's speech on Wednesday. It could give us a hint on what the CPI could be on Thursday. But based on analysis I've already seen, the jobs market in dollar is weak. Like we had non-farm payroll last week. Private sector is weak. Public sector is weak. Then the jobless claims figure. A lot of people are going for jobless claims in the United States of America. So since employment is weak in dollar, and the jobs that are created by the private sector is lower, both private sector and public sector, and people are applying for more jobless claims because people are being laid off, which means that a lot of people don't have money to spend. If people don't have money to spend, the feds cannot, okay, they are forced to cut interest rates. Yes, they are forced to cut interest rates. So if they cut interest rates, people will be encouraged to borrow. Okay, people will be encouraged to borrow. But since interest rates are high right now and the Fed has not cut interest rates yet, and if we see CPI increase on Thursday, I think the Feds will be forced to cut interest rate very, very soon. Okay, so we'll be monitoring what the Fed has to say on Wednesday to give us a clue on what might happen on Thursday with the CPI, because this is economics. Okay, it is economics. So you try and understand it, try and use it to also build yourself, build your finances, and build your plan for your future. Thank you so much. Thank you so much. Thank you so much for your time. Please smash the like button, comment below, join us on our live training session, subscribe for our VIP signals. Okay, if you're not part of a student, if you're not yet a student, join our academy, and let's win together. Let's trade together, and let's make profit together. Okay, I wish you guys a profitable trading week. Okay, and this is Anthony Phillips Njoku signing out. Peace.